The world of finance is witnessing what could be the most seismic shift of the century, as recent leaks from inside the U.S. Treasury reveal that Janet Yellen, the current Treasury Secretary, has officially pledged a staggering 70% of the United States national debt to XRP, with the digital asset being valued at $10,000 per coin. This isn't merely a headline or speculative rumor. It represents a radical restructuring of America's monetary system, positioning XRP not as a mere cryptocurrency or speculative asset, but as a foundational pillar of the new dollar system. This monumental move fundamentally redefines how national debt is managed and backed, and signals a tectonic shift in the way governments may operate financially in the digital age instead of traditional fiat currency, backed by faith in the government alone. The U.S. is integrating blockchain technology at the very core of its fiscal policy, by leveraging XRP's decentralized ledger and unique capabilities. The leaked Treasury documents, though heavily redacted to preserve sensitive information, clearly indicate a collateralization ratio that pegs XRP at $10,000 per token, marking a radical revaluation that institutionalizes XRP as a government-backed asset of unparalleled significance. These documents outline a framework where XRP's blockchain serves not only as a transaction ledger, but as collateral backing a significant portion of U.S. debt. This revaluation not only elevates XRP's market status, but also ties the future stability of the U.S. dollar and national economy directly to the success and security of the XRP ledger. This fusion of blockchain and government debt management is something financial experts have long predicted, but few expected to materialize so soon or at this scale. In the immediate aftermath of this revelation, market whales, or large institutional investors and holders of XRP, moved swiftly. On-chain data confirmed the movement of over 1 billion XRP tokens into strategic wallets, coinciding with an emergency meeting reportedly convened by Secretary Yellen herself. The sheer volume of these transactions indicates immense confidence among insiders and institutional players that the value of XRP will rise significantly. This rapid accumulation suggests that these entities are positioning themselves to benefit from a major price surge tied directly to governmental endorsement and integration music. When examining market behavior alongside the national debt clock, a real-time tracker of U.S. government debt, an extraordinary correlation emerges. This hyperdebt correlation shows that as the U.S. debt grows exponentially, so too does XRP's value. This suggests XRP is no longer functioning purely as a market asset, but as a debt-backed financial instrument intimately linked with the U.S. government's fiscal health. Such a direct correlation was unheard of until now, but this new dynamic could transform XRP from a volatile cryptocurrency to a stable store of value tied to real-world economic fundamentals. Financial analysts and crypto strategists are now converging on a consensus price target. XRP is projected to reach $10,000 per coin by the year 2025. This prediction is based not on speculative hype, but on actual policy decisions and market data that signal institutional adoption on an unprecedented scale. If XRP reaches this valuation, it would represent an astronomical increase from its current price, positioning it alongside or even above traditional financial assets. In market capitalization, the Federal Reserve is anticipated to hold XRP as a substantial portion of its reserves, with some estimates suggesting up to 50% of Fed reserves could be denominated in XRP. This shift would fundamentally change how central banks manage monetary policy, liquidity, and national economic security. This transformation is not merely domestic, it has profound international implications on the global stage. China appears to be responding decisively to this new paradigm. Reports suggest that China has begun divesting heavily from U.S. Treasury bonds and redirecting capital into XRP purchases, signaling a strategic pivot away from traditional financial instruments towards blockchain-backed assets. This move represents a significant geopolitical realignment as countries jockey for influence in a world where digital assets are increasingly seen as the future of financial stability and power. China's strategy of offloading U.S. bonds and acquiring XRP highlights the shifting balance of power in international finance and the decline of traditional fiat dominance. This global pivot away from fiat-based securities towards blockchain-backed assets like XRP has enormous implications for currency markets, trade agreements, In sovereign debt management worldwide, as XRP-backed reserves gain prominence, the traditional dollar-centric model faces potential challenges, and countries may seek to diversify or replace existing reserve currencies with digital assets. This shift could drive increased volatility in forex markets, but also create new opportunities for investors and institutions willing to embrace these music innovations. Traditional financial markets are already beginning to feel the tremors of this shift. Fiat currencies around the world may experience devaluation pressures as liquidity flows increasingly into blockchain-backed assets for investors and institutions. This means adapting portfolios, risk models, and compliance frameworks to account for the new reality, where digital assets are integral to national and international monetary systems. Those early to adopt or understand the implications of XRP's new role stand to benefit enormously, as its price appreciation is fueled by both market demand and institutional music mandates. What makes this development particularly compelling is the unprecedented government backing XRP has received for years. Cryptocurrencies have been viewed with skepticism, often dismissed as speculative or unregulated assets vulnerable to manipulation. However, the Treasury's integration of XRP into its debt strategy signals a paradigm shift, conferring legitimacy on XRP in the broader blockchain ecosystem. This government endorsement paves the way for wider regulatory acceptance and institutional investment, which in turn drives adoption and price stability. The Federal Reserve's embrace of blockchain technology goes beyond mere collateralization. The Fed recognizes the transformative potential of blockchain for improving transparency, security, and transaction speed across the financial system amid rising national debt and fiscal pressures. Traditional financial mechanisms have become inadequate. Blockchain-based assets like XRP offer a new robust alternative that can streamline monetary policy execution, improve liquidity management, and provide more precise control over money supply. This digital transformation ensures the U.S. remains at the forefront of global financial music innovation. In addition to the financial and economic aspects, this integration of XRP within United States debt management represents a strategic geopolitical move. By leveraging XRP, the United States not only modernizes its monetary system, but also counters economic threats from rivals by establishing a blockchain-backed dollar alternative. This innovation could serve as a deterrent against currency manipulation, trade wars, and economic sanctions, providing the United States with greater financial sovereignty and music influence. The 10,000 valuation for XRP by 2025 is supported by numerous data points from Treasury documents to on-chain activity and market analysis. Importantly, this target reflects the asset's new fundamental value driven by its role as a debt-backed reserve currency rather than mere speculation or hype. As XRP gains traction within government and institutional frameworks, it is poised to shift from a speculative instrument into a stable, highly liquid asset underpinning national and international economies. The ripple effects of this transformation will extend across all sectors, from banking and investment management to commerce and international trade. Financial institutions will be forced to adapt to blockchain-based systems. Regulators will implement new frameworks to govern digital assets, and consumers will encounter new forms of digital money backed by blockchain security. The transition will likely be complex and challenging, but the potential benefits include greater efficiency, reduced transaction costs, and enhanced financial inclusion. To conclude, the Treasury's groundbreaking pledge to collateralize 70% of U.S. debt with XRP at $10,000 per coin marks a watershed moment in the history of finance. It signals a comprehensive overhaul of monetary policy, integrates blockchain technology at the heart of national debt management, and sets the stage for a new global financial order. The surge in whale activity following Secretary Yellen's emergency meeting, the strong correlation between national debt growth and XRP's price, and China's reaction to the shift all underscore the profound and far-reaching impact of this move. This convergence of government action, institutional investment, and global geopolitical realignment makes XRP's ascent to $10,000 not only plausible, but inevitable forever, changing the landscape of money, power, and economic stability. Disclaimer: this video is for educational, informational purposes only. It is not financial advice. Please do your own research and consult with a financial advisor. before making any investment decisions.